In the last tutorial, we learned the accounting equation. In this tutorial, we will expand on it to learn the concepts of debit and credit. When Rohit invested $50,000 of his money and took a $50,000 loan from the bank to have $100,000 in cash in the business account to start his business, these two transactions resulted in the accounting equation. Assets, cash, equals liability plus equity. $100,000 equals $50,000 plus $50,000. Let's name the left side of the equation as the debit and the right side as the credit. Now Rohit decides to invest an additional $25,000 into the business and transfer $25,000 from his personal account. Rohit invested his money twice. The first time, he invested $50,000, and then he invested an additional $25,000, resulting in an increase in both assets and capital. We have just observed that every time Rohit invests more of his money, the debit side of the equation increases, while the capital increases by the same amount on the credit side. This leads us to the conclusion that an increase in assets is debited, and an increase in capital is credited. Conversely, a decrease in assets is credited, and a decrease in capital is debited. Now, Rohit decides to borrow an additional $25,000 to increase the cash flow in the business. We have just observed that every time Rohit borrows more money from the bank, the debit side of the equation increases with assets or cash, while liabilities increase by the same amount on the credit side. This leads us to the conclusion that an increase in assets is debited, and an increase in liabilities is credited. Conversely, a decrease in assets is credited, and a decrease in liabilities is debited. Now Rohit decides to buy a grocery store by paying $75,000 in cash. The store purchase has resulted in a decrease in cash or current assets and an increase in fixed assets. Hence, cash has decreased by $75,000, and the building or store has increased by $75,000. Now Rohit purchases 100 sack of rice at $50 per sack on cash, thus spending $5,000 in total for its first store inventory. So in this case, cash will be decreased and inventory will increase by $5,000. For the sake of simplicity, we assume that Rohit has sold all of his 100 sacks of rice at $60 over the period of 1 month without making any further purchases, thus having no leftover inventory. So, he made $6,000 in sales. So, what do you think? Should the sales be recorded as debit or credit? Let's recall the rule for capital. When you invested your money, capital increased on the credit side. The sales generated by selling sacks of rice are your money and should be treated the same as capital. Thus, we conclude that an increase in sales is credited. So, what do you think about expenses and the cost of sales? Should they be on the debit side or the credit side? Since the increase in sales is credited, an increase in expenses should be debited, as you expense out the cost of doing business from sales. Thus, we can conclude that an increase in expenses is debited. So this is our first profit and loss for that period. This is our balance sheet as of a certain point in time. Learning summary. Increase in asset and expenses are debited. Conversely, decrease in assets and expenses are credited. Increase in liabilities, capital and sales are credited. Conversely, decrease in liabilities and capital are debited. In the next lesson, we will learn the chart of accounts.